Okay, we're going to discuss the steps of asset disposal again. I'm going to refer to your notes again. And now when you get to exercise 4.17, you need to refresh your brain on something. If you look at the steps when we sell assets, up to now, up to before 4.17, you have not been selling any assets at the end of a year or during the course of a year. So you've been selling assets towards the beginning of a year. So there were no depreciation in place for the year. So you could basically just look at the 4 major steps. However, if we learn asset disposal, we are going to concentrate on 5 steps. So number 2 will become 2A, 2B, or we can rather change it and make it 1, 2, 3, 4, 5, which is going to be easier in the end. Right, so our first step would be to take the cost price and take it to asset disposal. Number 2, the second step is now going to be to work out the depreciation for the year. In 4.17, we're selling the asset at the end of the year. So we're going to first then work out the depreciation for the year. And then we're going to add the old depreciation on that specific asset plus the new. And then in total, we're going to post the total to asset disposal. And then we're going to look at step 3. Step 4 is now going to be, step 3 is now going to be step 4, our transaction. So we're going to say, okay, the transaction can be either one of them. And if you read exercise 4.17, you will see we're selling it on credit. So obviously we will write debtors control here. That's where your step 3 is, the actual transaction, which is now going to be step 4. And now we say, let's see, did we make a profit or loss? Okay, these are our 5 steps. Or you can say 4 steps, step 1, step 2A, step 2B, 4, 3, 4. It doesn't matter. Maybe it's going to be easier for you if we do the 5 steps. So let's go to exercise 4.17. If you read exercise 4.17, then you say that on the 28th of February, the end of the financial period, the following balance appeared. So they give you the end of the year balances. So obviously, you would see, you'll have to look whether the depreciation for the year was included or not. Then if you look at the opening balances, you'll see that vehicles at cost, but the accumulated depreciation on vehicles was that balance is for the beginning of the year. So no depreciation has been calculated or added to the accumulated depreciation for the year as yet. So you will have to calculate it. So let's now start with our steps. And let's try and find out what is our situation. This business uses the diminishing balance, book value, carry value balance, 20% per year to work out depreciation on vehicles. So when I want you to start, whenever you have an asset disposal, I want you to write it down like this. Do the information like this first. Okay. So what was the cost of the vehicle? What they say is, okay, there's only one vehicle. So the cost price as given is the cost price for the vehicle. You write it in. Then you write out what was the depreciation for this year. So the first step that you're now going to do is for this year. Why? Both the exercise 4.17 and 4.18, we are selling our asset at the end of the year. If you look at the date that it is sold, it's the 28th of February 25. So that is the end of the year. right? This year started on the 1st of March 24, and we are now at the end of February 25, and this is exactly where we are selling our vehicle. So we must still do the depreciation for the whole year. So if you will calculate the depreciation for the year, 20 over 100, for the whole year, 12 over 12, times, which method are we using? Diminishing balance. Diminishing means on book value. What is the book value of the vehicle at that stage? Cost price minus accumulated depreciation from the last year. That's your book value at that stage. Okay, then you work out the depreciation, you get 16960. That's step 2. Step 3, work out the total accumulated depreciation now. Okay, so this is last year's, which is 47,700, plus what you've just calculated, the 16960. Added together give you your total accumulated depreciation. Step 3. Step 4, what was the transaction? 65,000. We're selling it for 65. So this means that we're selling it for credit, which means we're going to use debtors control. Okay, now, did we make a profit or did we make a loss? How will we do that? Well, if you want to work out the book value, you take cost price minus total depreciation, total accumulated depreciation. So that minus 64 is 67,840. That is the value of the vehicle at this stage. What are we selling it for? 65. So if we work out the difference between 67 and 65, we will find we are making a loss of 2840. So when you start an exercise from now on and it's an asset disposal or any adjustment and you see it's an asset disposal, I want you in future to write down this block. 1, 2, 3, 4, 5, and then we're going to renumber them and fill in the amounts before we do the double entry. And now I know for each one of these I have a double entry that I need to show. And if you go to your textbook, they ask you to show the double entries for vehicles. You must do vehicle, accumulated depreciation, asset disposal, loss on sale, and depreciation. So you're going to use all of these double entries. You're going to fill them in. And you will see, if you now go to your memo that I've also placed on Teams for you, you can see. I'm going to try and see if I can fit it all in. Cost price is vehicles. There's my step 1. Take out cost price to asset disposal. Double entry. Next one, work out the depreciation for the year. Depreciation debit, that's number 2. And accumulated depreciation credit. Number 3, or 2B, number 3, add the total and take it to asset disposal. Total accumulated, there it is, there's your number 3, going to year, asset disposal. Number 4, determine the transaction, there it is. Number 5, that was a credit transaction, that's why it is debtors control. Number 5, calculate your profit or loss. We've already done that, but you also know that you can find the missing side, the missing amount, and this time it's on this side, and therefore going to that side means it's now a loss, because a loss is an expense, and we know expenses decrease owners' equity. Can you see? There's number 5. Right. That was exercise 4.17. I want you to also do 4.18 for tomorrow.